October 2008. Lehman Brothers collapsed. Banks froze credit. The stock market plummeted 40%. Retirement accounts evaporated. Housing prices crashed. Unemployment doubled. The global financial system faced its worst crisis since the Great Depression. In Lancaster County, Pennsylvania, the Amish community barely noticed. They held no stocks, carried no mortgages from major banks, maintained no retirement accounts that could vanish. Their businesses continued operating. Their farms kept producing. Their young people kept finding work. When economists studied community resilience during the 2008 crisis, they found something remarkable. Amish household wealth actually increased during a period when average American household wealth fell by 40%. This wasn't luck. The Amish had survived the panic of 1873, the Great Depression, the stagflation of the 1970s, and every financial crisis between without banks, without government assistance, and without compromising their principles. Today, the Amish population doubles every 20 years while their wealth grows faster than the national average. They operate over 12,000 businesses, own hundreds of thousands of acres of debt-free farmland, and maintain financial reserves that would be the envy of most corporations. This is how a society rejected modern finance and built something more resilient. The Amish economic system represents one of the most successful alternative financial models in modern history, demonstrating that a community can achieve prosperity and security without participating in conventional banking, insurance, or governmental welfare systems. Understanding how the Amish accomplish this requires examining not just their financial practices, but the complete social and cultural framework that makes their economic approach viable and sustainable across generations. The Amish trace their origins to the Anabaptist movement in 16th century Europe, specifically to followers of Jacob Ammon, who split from other Mennonites in 1693 over questions of church discipline and separation from the world. They emigrated to North America beginning in the early 18th century, initially settling in Pennsylvania, where William Penn's colony offered religious tolerance. From approximately 5,000 Amish in North America in 1900, the population has grown to over 375,000 today, with settlements in 32 states and 4 Canadian provinces. This demographic expansion occurred while the Amish maintained economic practices that seem incompatible with modern prosperity. They reject most modern technology, including electricity from public grids, automobiles, telephones in homes, and computers. They limit formal education to 8 grades in their own schools. They refuse participation in Social Security, Medicare, and most governmental assistance programs, and they avoid conventional banking relationships, insurance companies, and investment markets that most Americans consider essential for financial security. Yet by conventional economic measures, the Amish are remarkably successful. Studies of Amish household wealth show median net worth substantially higher than comparable rural non-Amish households. Amish business failure rates are significantly lower than national averages, with some studies suggesting that over 95% of Amish businesses survive their first 5 years, compared to roughly 50% of American businesses generally. Amish farms remain profitable when many conventional American farms struggle financially, and the Amish accomplish this while working fewer hours than typical Americans, maintaining stronger family structures, and reporting higher life satisfaction. The foundation of Amish economic resilience is the principle of Gelassenheit, a German word encompassing submission, humility, and yielding to community and divine will. This principle shapes economic behavior in ways that create natural protection against the vulnerabilities that plague modern consumer economies. Gelassenheit discourages displays of wealth, competitive consumption, and individual economic ambition pursued at community expense. It creates social pressure toward modest living, mutual assistance, and economic interdependence rather than individual independence. The community structure provides the organizational framework that makes Amish economic practices function. The basic unit is the church district, consisting of 20-40 families who worship together in rotating home services and who maintain collective responsibility for members' welfare. Multiple districts in geographic proximity form settlements or communities that coordinate on economic matters, including business relationships, land purchases, and crisis response. This nested organizational structure allows both local autonomy and coordinated action at scales necessary for economic resilience. The rejection of insurance, both commercial and governmental, forces the development of alternative risk management systems that prove remarkably effective. Rather than purchasing fire insurance, the Amish maintain community funds to rebuild destroyed properties. Rather than buying health insurance, they negotiate direct payment arrangements with medical providers and maintain aid funds for catastrophic medical expenses. Rather than participating in Social Security, they save for retirement and maintain multi-generational households where elderly parents live with adult children who provide support. These alternative systems require high levels of trust, strong social cohesion, and effective enforcement of community norms. The Amish maintain these social prerequisites through practices including church discipline, the ordnung, the unwritten rules governing behavior, and the threat of meedong, shunning for serious violations of community standards. These mechanisms ensure that individuals contribute to mutual aid systems and don't exploit community assistance while free-riding on obligations. The economic advantages of Amish practices become apparent when analyzing their cost structures compared to conventional American households. The typical Amish family spends nothing on insurance premiums, which for conventional families often exceed $15,000 annually for health insurance alone. They spend nothing on Social Security and Medicare taxes when self-employed in approved occupations. They spend minimally on transportation, as horses and buggies cost far less than automobiles when accounting for purchase price, fuel, insurance, and maintenance. And their limited use of electricity and rejection of most consumer electronics and entertainment eliminate expenses that conventional families consider essential. The agricultural foundation of traditional Amish economy provides natural resilience that non-agricultural communities lack. Families producing significant portions of their own food are insulated from food price inflation. Farms generating income from diverse products are protected against single market collapses. And agricultural land that appreciates in value while generating income provides wealth accumulation without dependence on financial market performance. The demographic profile of Amish communities creates economic advantages that compound over time. High birth rates, Amish families average 6-7 children, combined with high retention rates around 90% of young people choosing to join the church, mean that the population doubles approximately every 20 years. This growing population needs housing, farmland, and businesses, creating internal economic demand that drives growth independent of external economic conditions. The apprenticeship and skills transmission systems ensure that young Amish adults enter the workforce with practical capabilities that translate immediately into economic productivity. A 15-year-old Amish boy has often already learned carpentry, farming, and equipment repair through working alongside his father and other community members. A 15-year-old Amish girl has mastered cooking, sewing, gardening, and household management. This skills foundation means young adults can contribute productively to family economies and can establish independent households with minimal external resources. The cultural prohibition on debt, or at least on consumer debt and dependence on external financing, prevents the leverage that makes conventional households vulnerable to economic disruption. Amish families save before purchasing, buy used rather than new when possible, and size their homes and farms to what they can afford rather than what banks will lend. This conservative approach means they miss some opportunities that leverage enables, but it also means they're never forced to sell assets at unfavorable times to meet debt obligations. The business practices that have developed as increasing numbers of Amish work in non-agricultural enterprises show how the community adapts to economic change while maintaining core principles. Amish entrepreneurs create businesses that employ community members, that produce goods and services valued by both Amish and non-Amish customers, and that generate income without requiring individual Amish to work in external employment, where they might face pressure to compromise religious principles. The theological foundation for Amish economic practices rests on the principle of separation from the world, derived from biblical passages including Romans 12:2, "Do not be conformed to this world," and 2 Corinthians 6:14, "Do not be unequally yoked with unbelievers." This separation isn't physical isolation. but rather maintaining distinct identity and practices that prevent assimilation into mainstream society. Economic separation is a critical component of this broader separation. The Amish interpretation of separation has profound economic implications. Participation in Social Security and Medicare would create dependence on government systems and would violate the principle of caring for one's own. The Social Security Act of 1935 initially included agricultural workers, potentially requiring Amish participation, but the Amish lobbied successfully for exemption. The final exemption came in 1965, when Congress allowed self-employed Amish to opt out of Social Security based on religious objections to insurance. This exemption requires that the Amish provide for their own elderly, disabled and needy through community mechanisms rather than governmental support. The requirement isn't merely theoretical. Amish communities actually do support members who would otherwise need public assistance. The multi-generational household structure where elderly parents live with adult children is both cultural preference and economic necessity. The grandpa house, a smaller dwelling built adjacent to the main farmhouse, allows elderly couples to maintain some independence while being supported by the younger generation. The rejection of commercial insurance similarly derives from theological principles about trusting God rather than commercial risk pooling, and about maintaining community interdependence rather than contractual relationships with external corporations. The Amish argue that purchasing insurance demonstrates lack of faith in divine providence, and that paying premiums to insurance companies transfers resources out of the community that should remain available for mutual aid. The practical implementation of self-insurance requires substantial community financial resources. Each church district maintains aid funds, typically starting with an alms fund for routine assistance to needy members. Larger needs are addressed through special collections where all members contribute according to their means. For catastrophic needs, barn fires, major medical expenses, deaths leaving young families, the response can involve multiple districts or entire settlements contributing. The economic discipline this system requires shouldn't be underestimated. Amish families must maintain financial reserves for emergencies while also being prepared to contribute to others' emergencies. A family might be asked to contribute $500 or $1,000 to help rebuild a neighbor's barn, to support a family facing medical bills, or to assist a widow with young children. These requests come irregularly, but inevitably, and families that don't maintain reserves risk either failing to contribute their share or depleting their resources when called upon. The social pressure to maintain financial prudence is intense and constant. The community knows through informal networks who is struggling financially and who is prosperous. Families who live beyond their means or who fail to maintain reserves face social disapproval that manifests in subtle but powerful ways. Conversely, families known to be financially stable and generous with mutual aid enjoy enhanced social status and influence in community decisions. The role of auctions in Amish economic life exemplifies how community mechanisms replace market institutions. Benefit auctions raise funds for medical expenses, fire relief, or school construction. The auction itself is a social event where the entire community gathers, reinforcing social bonds while accomplishing economic purposes. Items donated for auction: quilts, furniture, baked goods, farm equipment, represent both financial value and social capital as community members demonstrate commitment through contributions. The pricing mechanisms at these auctions reveal interesting dynamics. Bidders know that their participation is being observed by the community and that generous bidding, paying above market value for items, demonstrates both financial capacity and commitment to community welfare. A successful businessman who bids aggressively at benefit auctions signals his prosperity and his willingness to share it, enhancing his social standing. Conversely, someone who appears to have financial capacity but who bids minimally might face social disapproval. The prohibition on pursuing legal action against other Amish members, based on 1 Corinthians 6, which criticizes believers taking disputes before secular courts, eliminates an entire category of economic risk that plagues conventional business relationships. Amish businesses deal with each other on the basis of trust and community enforcement of norms, rather than on written contracts and legal recourse. This dramatically reduces transaction costs but requires high levels of social cohesion and effective informal dispute resolution. The church plays the central role in dispute resolution, with bishops and ministers mediating business disagreements and enforcing settlements. A businessman who cheats customers or fails to honor commitments faces church discipline, ranging from private admonishment to public confession to, in serious cases, temporary or permanent midong, exclusion from community fellowship and economic relationships. The threat of midong is powerful enough to enforce honest dealing in most cases. The limitations on permissible occupations shape Amish economic development in distinctive ways. Military service is prohibited, as inconsistent with pacifist principles. Law enforcement, political office, and most governmental employment are avoided as inconsistent with separation from the world. Corporate employment in large secular corporations is discouraged because it would require extensive daily interaction with non-Amish and might create pressure to compromise principles. The practical effect is that Amish economic activity concentrates in agriculture, skilled trades, small businesses, and some manufacturing. The 8th grade education limit, established to prevent children from being influenced by secular worldviews taught in high schools and to ensure they remain integrated in community life and economy, means the Amish can't pursue occupations requiring extensive formal education. No Amish doctors, lawyers, engineers, or scientists serve the community. These needs are met through relationships with non-Amish professionals. This educational limitation might seem to restrict economic options, but in practice the focus on practical skills and apprenticeship produces highly competent workers in the occupations Amish culture values. The gender roles in Amish economic life are clearly defined and significantly different from mainstream American society. Men primarily engage in farming, skilled trades, and business ownership. Women primarily manage households, raise children, and engage in home-based economic activities including gardening, canning, sewing, baking, and increasingly in some settlements, operating small businesses from home. These gender distinctions aren't merely cultural preferences, but are understood as divinely ordained roles that shouldn't be questioned or altered to accommodate individual preferences. The economic implications of these gender roles include that most Amish families maintain single-income households, with the husband's occupation providing most cash income, while the wife's domestic production reduces cash expenses. The economic productivity of Amish women in managing large households efficiently, producing food, clothing, and services that would require substantial cash expenditure to purchase, represents significant economic contribution not captured in conventional income statistics. The absence of conventional banking relationships for many Amish. They aren't absolutely prohibited from using banks, but many choose to minimize such relationships, requires alternative mechanisms for accomplishing functions that banks provide for most Americans, including saving, borrowing, and facilitating transactions. The Amish have developed community-based systems that serve these functions while maintaining consistency with principles of separation and mutual interdependence. The church district serves as the primary financial intermediary for its members, though not in a formal banking sense with accounts and regular transactions. Instead, the district maintains knowledge of members' financial situations through informal networks and through the bishops' and ministers' awareness gained through pastoral care. When a family needs to borrow money for legitimate purposes, purchasing farmland, starting a business, building a home, the district leadership can facilitate connections between families with capital to lend and families needing to borrow. These loans typically occur through direct personal relationships between community members rather than through institutional intermediaries. A prosperous farmer with excess capital might loan $50,000 to a young couple purchasing their first farm, with terms negotiated directly between the parties, but often with church leadership aware of and blessing the arrangement. Interest rates are typically modest, often below market rates, reflecting the mutual aid dimension alongside the commercial aspect. The relationship is based on trust and community enforcement rather than legal contracts or collateral in the conventional sense. The repayment of these loans is enforced through social pressure and community sanctions rather than legal mechanisms. A borrower who fails to make agreed payments when financially capable would face church discipline. the entire community would become aware of the default, affecting the borrower's social standing and business relationships. The borrower might face difficulty obtaining future loans or business credit within the community. In serious cases, church discipline could escalate to formal sanctions. The willingness of Amish to lend to each other at favorable terms and without extensive collateral or legal protection reflects several factors. The lender typically knows the borrower well, either through family connections or through long community association, allowing assessment of character and reliability that's more informative than credit scores. The lender knows that the church will support enforcement of legitimate debts, and there's often an expectation that today's lender might be tomorrow's borrower, creating reciprocal obligations that encourage fair dealing. The specialized financial intermediaries that have developed in some Amish communities show how the community adapts to growing complexity. Some settlements have Amish businessmen who informally function as bankers, matching savers and borrowers, and sometimes taking small spreads for facilitating transactions. These individuals maintain reputations for fairness and discretion, and they typically operate with blessing of church leadership, who recognize the need for such services as communities grow. The role of non-Amish banks in Amish economic life is more complex than simple prohibition might suggest. Many Amish do maintain bank accounts for business purposes, particularly those operating businesses selling to non-Amish customers who pay with checks or cards. But even these banking relationships are often limited. Checking accounts for transactions rather than savings accounts, mortgages or investment products. The checking accounts are practical necessities for participating in cash economy, rather than indicators of philosophical acceptance of banking. The Amish relationship with credit unions has been more comfortable than with commercial banks, partly because credit unions are member-owned cooperatives rather than for-profit corporations, and thus align better with Amish values of mutual benefit. Some settlements have encouraged members to use credit unions for services like checking accounts and car loans. The Amish themselves don't own cars, but their businesses often purchase vehicles for necessary transportation that they hire non-Amish to drive. The practice of the Amish paying cash for major purchases, farms, businesses, equipment, provides enormous economic advantages that compound over time. A family that saves to purchase a farm outright rather than taking a mortgage avoids decades of interest payments that might total more than the original purchase price. This cash purchase approach requires patience and discipline. Young couples often live with parents or rent while saving, but the long-term benefits are substantial. The collective purchasing power that results from the Amish population's growth creates opportunities for negotiating favorable terms with suppliers and for developing Amish-owned wholesale and supply businesses. An Amish contractor who knows he can reliably purchase $100,000 of lumber annually for community members' building projects can negotiate volume discounts from suppliers. Amish-owned hardware stores, lumber yards and equipment dealers can operate on lower margins than conventional retailers because they have guaranteed customer bases and lower operating costs. The development of Amish loan funds and formal lending institutions represents adaptation to economic growth while maintaining core principles. Some settlements have established formal funds capitalized through member contributions that make loans for farmland purchase, business startups, and emergency needs. These funds operate according to principles compatible with Amish values, modest interest rates, preference for productive uses of capital, and oversight by church leadership, while providing more systematic lending capacity than informal personal loans could achieve. The prohibition on accepting government farm subsidies and other agricultural support programs, maintained by some but not all Amish groups, reflects the principle of separation and self-sufficiency. Families that refuse subsidies must compete without the support that conventional farmers receive, forcing greater efficiency and diversification. This discipline has likely contributed to Amish farm profitability. Farms that survive without subsidies are genuinely economically viable rather than dependent on government payments. The tax treatment of the Amish creates interesting economic dynamics. The Amish pay property taxes, sales taxes, and income taxes when applicable, just as other Americans do. They receive the exemption from Social Security and Medicare taxes only for self-employed individuals in approved occupations, farming and some other traditional work, and only when they formally apply for exemption. This means the Amish actually bear full tax burdens while receiving fewer government services than typical Americans, creating fiscal transfer from Amish communities to general public. The implications of this fiscal relationship are significant. The Amish essentially subsidize government services they don't use, public schools they don't attend, social services they refuse, infrastructure for automobiles they don't own. The typical Amish family likely contributes more in taxes relative to government services received than the typical American family. This makes their economic success even more impressive. They prosper while bearing disproportionate fiscal burdens. Agriculture remains the cultural and economic foundation of Amish society, despite the reality that fewer than half of Amish families now derive primary income from farming. The farming family represents the ideal in Amish culture, and even families who operate non-agricultural businesses often maintain gardens, chickens, and other small-scale agricultural production that connects them to the land and provides some self-sufficiency. The Amish approach to farming differs fundamentally from industrial agriculture that dominates American food production. Amish farms are typically small by modern standards, 40 to 120 acres rather than the hundreds or thousands of acres common in mechanized farming. They employ horse-drawn equipment rather than tractors and combines. They rely on family labor rather than hired workers, and they often pursue diversified production of multiple crops and livestock rather than monoculture specialization. These characteristics might seem to place Amish farms at severe competitive disadvantage, yet Amish farms remain profitable when many conventional farms fail. Understanding this profitability requires examining the complete economic picture rather than just gross revenues. The key lies in cost structure. Amish farms avoid the massive capital investments in equipment that burden conventional farms. A modern combine might cost $400,000 to $500,000, requiring farms to cover that cost plus financing charges through greater production volume. An Amish farmer using horse-drawn harvesting equipment might invest $15,000, requiring far less revenue to cover capital costs. The operating costs similarly favor Amish methods on small-scale operations. Horses consume feed that can often be grown on the farm, creating a closed nutrient cycle rather than dependence on purchased fuel. Repairs to horse-drawn equipment can be performed by the farmer using community repair shops, while modern equipment often requires dealer service at substantial cost. The Amish farmer's labor is provided by family members whose compensation is their share of farm production rather than by hired workers requiring cash wages. The diversification practiced on most Amish farms provides resilience against market fluctuations and crop failures that can devastate specialized operations. A farm producing dairy products, beef, pork, chickens, eggs, corn, hay, and vegetables is unlikely to face simultaneous collapse of all these markets. Poor prices for beef might coincide with good prices for eggs. A failed corn crop might be offset by successful vegetable gardens. This diversification was standard practice in American agriculture before mechanization enabled specialization, and the Amish retention of traditional methods preserves the resilience that specialization sacrifices. The soil management practices on Amish farms, emphasizing crop rotation, manure application, and cover cropping, maintain and often improve soil fertility without dependence on chemical fertilizers. This creates long-term sustainability that industrial agriculture's chemical-intensive methods can't match. Amish farms passed from generation to generation remain productive for centuries, while industrially farmed land often suffers declining fertility requiring ever-increasing chemical inputs. The direct marketing channels many Amish farms use capture value that would otherwise go to intermediaries. A farm selling produce, eggs, and meat products directly to consumers at farmers' markets or through roadside stands receives retail prices rather than wholesale prices paid to farmers who sell through commodity markets or processors. A dozen eggs that might bring a farmer $1.50 wholesale sells for $4 or more at retail, with the farmer capturing the full margin rather than sharing it with distributors and retailers. The agritourism that has developed around some Amish farming areas creates additional revenue streams while requiring minimal investment. Non-Amish visitors seeking authentic agricultural experiences, fresh products, and cultural tourism come to Amish areas and purchase goods and services. Amish farms benefit from this tourism without needing to modify their operations significantly. They simply continue farming as they always have, while visitors observe and purchase. The land ownership patterns in Amish communities show how agricultural foundation supports broader economic success. Amish families who purchase farmland and pay it off build substantial equity as land values appreciate. A family that purchased 80 acres for $300,000 in 1990 and paid it off over 20 years now owns land worth perhaps $800,000 to $1,200,000 depending on location, creating net worth of nearly $1 million. This equity can be tapped through sale of some acreage to finance retirement or to help children establish their own farms. The succession planning for Amish farms typically involves transferring the farm to one child, usually a son who has worked on the farm and wishes to continue farming. Other children receive compensating assets or cash equivalents, so all siblings receive roughly equal inheritances. This system ensures farms remain operational rather than being subdivided into parcels too small for viable farming or sold to developers who convert farmland to other uses. The challenge of farmland scarcity in established Amish settlements drives expansion to new areas where land is more affordable. Lancaster County, Pennsylvania, the oldest and largest Amish settlement, has seen farmland prices rise to levels where young families can't afford to purchase farms. This drives migration to newer settlements in Ohio, Indiana, Wisconsin, Missouri, Kentucky, and other states where farmland remains affordable. These new settlements establish agricultural economies that eventually mature and generate their own land price pressures, creating cycles of settlement founding. The tension between agricultural ideal and economic reality is increasingly apparent as Amish communities grow. The simple mathematics shows that with families averaging 6-7 children, and with population doubling every 20 years, agriculture alone can't provide livelihoods for all young adults. Even if every Amish farm is eventually divided among multiple children, the portions would become too small for viable farming within a few generations. This necessitates the development of non-agricultural economic opportunities that can absorb the growing population while maintaining community cohesion. The cottage industries that connect to agriculture, production of cheese, jams, baked goods, quilts, furniture, allow families to generate income while maintaining farm bases. A farm family might derive $30,000 from agricultural production, $20,000 from a home-based bakery selling to tourists, and $15,000 from the wife's quilting, creating combined household income of $65,000 that supports the family while allowing them to continue farming. This combination preserves agricultural lifestyle while acknowledging economic realities. The horse breeding and training that many Amish farms pursue as supplemental income represents sophisticated agricultural enterprise. Good draft horses suitable for farm work can sell for $2,000 to $5,000 or more, and a farm that breeds and trains several horses annually adds significant income. The knowledge required for successful horse breeding and training, understanding bloodlines, training methods, and market preferences represents substantial human capital developed over generations. The Amish community's resilience during major economic crises provides compelling evidence that their economic model delivers security advantages that conventional approaches lack. Examining how the Amish fared during the Great Depression, the 1970s stagflation, the 2008 financial crisis, and the COVID-19 pandemic reveals consistent patterns of stability when surrounding economies faced chaos. The Great Depression of the 1930s devastated much of rural America. Farm prices collapsed, banks failed, wiping out depositors' savings. Mortgage foreclosures forced families from farms their ancestors had worked for generations. Unemployment reached 25%. The Amish experience differed dramatically. The Amish didn't have bank deposits to lose when banks failed. They didn't have stock portfolios that evaporated. Most didn't have mortgages that could be foreclosed. Their farms produced food for household consumption, regardless of market prices for cash crops. The historical record suggests that Amish communities actually grew stronger during the Depression, as the relative advantages of their economic approach became apparent. Families that had been tempted to leave for economic opportunities in cities found those opportunities disappeared, making traditional Amish agriculture look more attractive. non-Amish neighbors observed that Amish families continued eating well, maintaining their farms and supporting each other while non-Amish struggled. Some non-Amish actually joined Amish communities during this period, attracted by demonstrated resilience. The mechanisms of mutual aid proved especially valuable during the Depression. When a family faced particular hardship, medical emergency, death of breadwinner, barn fire, the community's collective response prevented the kind of desperation that forced many non-Amish into destitution. The tradition of helping neighbors harvest crops, rebuild buildings, or manage farms when families faced crises meant that temporary setbacks didn't cascade into permanent ruin. The 1970s stagflation created different challenges. High inflation combined with economic stagnation, oil shocks, and declining real wages for most Americans. Amish communities again demonstrated resilience, though the mechanisms differed from the Depression. The inflation that eroded non-Amish purchasing power had less impact on Amish families producing much of their own food, clothing, and goods. The oil price increases that devastated automobile-dependent families barely affected Amish using horses for transportation. The business adaptations the Amish were making during the 1970s, expansion into construction, manufacturing, and retail, proved well-timed as these sectors offered opportunities even as traditional agriculture faced challenges. Amish construction crews found steady demand from both Amish and non-Amish customers who valued their skills and reliability. Amish furniture makers and manufacturers developed markets for quality products at competitive prices. The farm crisis of the 1980s, which forced many conventional farms into bankruptcy as land values collapsed and interest rates spiked, had limited impact on debt-free Amish farms. While Amish farmers faced the same price pressures as conventional farmers, their lack of debt meant they could survive low prices that forced leveraged operations into foreclosure. The families that lost non-Amish farms often sold to Amish buyers who could purchase with cash or minimal borrowing, allowing Amish land holdings to expand during the crisis. The 2008 financial crisis and subsequent Great Recession provide the most thoroughly documented case of Amish resilience, because this occurred when Amish communities were larger and more visible, when researchers were better equipped to study comparative economic outcomes. The data shows striking divergence between Amish and non-Amish economic trajectories. While median American household wealth fell approximately 40% between 2007 and 2010, studies of Amish communities in Ohio and Pennsylvania found that median Amish household wealth actually increased during this period. The mechanisms behind this divergent performance are clear when examining exposure to the crisis's causes. The housing bubble and subsequent collapse that destroyed wealth for millions of Americans barely affected the Amish. They didn't own suburban houses purchased with subprime mortgages. They weren't flipping investment properties with borrowed money. Their homes were built with cash on land they owned outright. When housing prices crashed, Amish households felt no impact. The stock market collapse similarly passed over Amish communities. They held no 401k accounts that lost 40% of value. They owned no mutual funds that evaporated. Their retirement security depended on farm equity, business assets, and multi-generational support systems rather than on financial markets. When markets crashed, Amish retirement prospects remained unchanged. The banking system instability that froze credit and forced consolidation among banks affected the Amish minimally. Most Amish businesses operated without bank credit, funded through owner equity, retained earnings, and community lending. When banks stopped lending, Amish businesses continued operating. The few Amish who did use bank credit generally had strong balance sheets and relationships that made them attractive customers even when banks were tightening lending standards. The unemployment that devastated non-Amish communities during the Great Recession barely touched Amish settlements. Amish businesses operated in sectors, construction, agriculture, manufacturing, that while affected by the recession didn't collapse. The community employment networks meant that young Amish looking for work could find opportunities through family and community connections even when outside employment was scarce. And the agricultural foundation meant that families could always return to farming if other opportunities disappeared. The COVID-19 pandemic of 2020-21 created different challenges but again demonstrated Amish resilience. The lockdowns, business closures, and economic disruption that characterized governmental pandemic responses affected Amish communities less severely than mainstream society. Amish businesses continued operating, sometimes defying closure orders based on religious liberty arguments, but often simply being ignored by authorities overwhelmed with trying to enforce restrictions. The agricultural basis of many Amish families meant they could produce food even when supply chains struggled. The multi-generational households meant childcare remained available when schools and daycare centers closed. The community mutual aid meant that families facing illness or economic hardship received support. And the social fabric remained strong because Amish communities continued meeting for worship and fellowship despite recommendations or requirements to avoid gatherings. The comparative mortality from COVID-19 in Amish communities versus surrounding populations remains somewhat unclear, because the Amish often don't seek conventional medical care, and deaths might not be reported to authorities. But the available evidence suggests that while COVID-19 certainly affected Amish communities, the impact wasn't catastrophic, and communities maintained functionality throughout the pandemic. The pattern across these various crises is consistent. Amish economic practices that appear risky or inefficient during normal times provide valuable insurance during crises. The lack of debt that limits growth potential also prevents bankruptcy during downturns. The agricultural foundation that generates lower income than industrial employment provides food security when supply chains fail. The community mutual aid that seems inefficient compared to insurance proves reliable when insurance companies and governments struggle to meet obligations. The mutual aid systems that substitute for commercial insurance and governmental social safety nets represent perhaps the most distinctive and essential element of Amish economic practice. Understanding how these systems work reveals both their strengths and their limitations, and shows why they require the strong community cohesion that Amish society maintains. The alms fund maintained by each church district forms the foundation of routine mutual aid. This fund is financed through collections during worship services, with members contributing according to ability without formal assessment or requirement. The amounts contributed vary based on family circumstances and local economic conditions, but the typical district with 30-40 families might collect $10,000 to $20,000 annually for the alms fund. The alms fund addresses routine needs that don't rise to the level of a catastrophic emergency, but that would create hardship for affected families. A widow without adequate income receives regular payments from the alms fund. A family facing unexpected medical bills for a child's illness receives assistance. A young couple struggling to establish their household receives support. The bishop and ministers administering the fund exercise discretion based on their knowledge of families' circumstances and needs. The accountability mechanisms for alms fund use are informal but effective. The bishop and ministers know who receives assistance and why, while specific amounts and recipients aren't publicly announced. In a close community where everyone knows everyone else's business, significant assistance doesn't remain secret. Recipients understand that community support comes with expectation of appropriate gratitude and reciprocal contribution when their circumstances improve. The larger emergency response systems mobilize for catastrophic needs, most visibly for barn fires. When fire destroys a barn, a common enough occurrence given the combination of livestock, hay, and limited fire protection, the community response is immediate and comprehensive. Within days, sometimes within hours, community members arrive to begin rebuilding. The barn raising has become somewhat romanticized in popular culture, but the reality is impressive. A typical barn raising might involve 200-300 men working together with remarkable efficiency and coordination. The work is organized by experienced supervisors who assign tasks and ensure the complex carpentry proceeds safely and correctly. The women prepare and serve massive amounts of food for the workers. The project that would take a conventional contractor months is completed in days, with the barn frame erected in a single day and the structure completed within a week or two. The economics of this system are striking. A barn that might cost $200,000 to construct using hired labor costs perhaps $40,000 to $60,000 in materials when built through community volunteer labor. This cost reduction is multiplied across the community. Every family that might need a barn built benefits from the same system. Over time, Most families both contribute labor to others' barn raisings and receive the benefit of community labor for their own building needs. The medical aid system has developed sophistication as medical costs have increased. Minor medical needs are paid directly by families from their own resources. Significant but manageable medical expenses might be addressed through the alms fund or through informal borrowing from extended family. But truly catastrophic medical expenses, cancer treatment, major surgery, extended hospitalization require broader community response. When a family faces medical bills exceeding their capacity to pay, the bishop notifies other bishops in the settlement and sometimes in other settlements. Collections are taken in church services across multiple districts. Benefit auctions are organized. The family's situation is communicated through community networks, and support flows in from across the Amish world. Cases involving children with cancer or other sympathetic circumstances can generate $100,000 or more in contributions. The relationship between Amish patients and medical providers has evolved into distinctive patterns that reflect both Amish needs and providers' business interests. Hospitals and physicians in areas with large Amish populations often negotiate payment arrangements, where the Amish pay cash at significant discounts off standard rates. A hospital that bills insurance companies $100,000 for a surgery might accept $45,000 cash from an Amish patient, recognizing that cash payment without billing complexity or collection risk justifies the discount. The Amish Medical Aid Plan and similar organizations represent more formal approaches to handling medical costs while maintaining Amish principles. These aren't insurance in the conventional sense, but rather organized systems for pooling resources and distributing costs. Members make regular contributions, and the plan pays members' medical expenses according to established guidelines. The plans are explicitly structured to comply with religious objections to insurance while providing practical risk-pooling benefits. The unemployment insurance provided through community mechanisms operates differently than government unemployment benefits, but often proves more effective for individual families. When an Amish worker loses a job, the community network activates to find new employment. Church leaders, family members and business owners in the community communicate about available positions. The social pressure to help community members find work is strong, and opportunities are often created even when no obvious opening exists. This system works partly because of the Amish business community structure. Many small businesses owned by community members who feel obligation to employ fellow Amish when possible. It works because extended families often operate multiple businesses or farms that can absorb additional workers temporarily. And it works because the community collectively understands that unemployment assistance is reciprocal. Today's employer might be tomorrow's unemployed worker needing community help. The disability support for members who become unable to work through injury or illness demonstrates mutual aid at its most comprehensive. A farmer who suffers a disabling injury faces immediate practical problems. Crops need harvesting, livestock need tending, income has stopped. The community response addresses all dimensions simultaneously. Other farmers harvest the disabled farmer's crops. Neighbors handle daily livestock care. The alms fund provides income replacement, and long-term planning begins for how the family will sustain itself. The long-term support might involve adapting the farm operation so the disabled farmer can continue contributing, transitioning from dairy farming requiring daily intensive labor to beef cattle, requiring less constant attention, for example. It might involve the farm being essentially operated by community volunteers while nominally remaining the disabled farmer's farm. Or it might involve financial assistance allowing the family to sell the farm and establish a less physically demanding household economy. The widow and orphan support that religious tradition strongly emphasizes receives particular community attention. A young widow with children faces overwhelming challenges in Amish society, where most income-generating work is male-coded. The community response typically includes direct financial support from the alms fund, assistance with housing and farm operation if she has land, help finding appropriate income-generating work she can do while raising children, and eventual help finding a new husband if she desires to remarry. The elderly care provided through multi-generational households reflects both cultural preference and economic necessity created by refusing Social Security and Medicare. Adult children understand that they will support their parents in old age, just as their parents supported their grandparents. The grandpa house arrangement allows elderly couples to maintain some independence while being cared for by adult children. When one spouse dies, the survivor often moves into the main house with the younger family. This system distributes costs across family rather than concentrating them through institutional long-term care. Instead of paying $60,000 to $80,000 annually for nursing home care, the family supports elderly parents through household resources, adult children's time providing care, and community assistance for medical needs. The costs are real. Caring for elderly parents requires time and effort, but they're lower than institutional care, and they're experienced as family obligation rather than financial catastrophe. The transformation of the Amish economy from primarily agricultural to increasingly entrepreneurial and business-focused represents one of the most significant changes in Amish life over the past 50 years. Understanding how this transformation occurred while maintaining community cohesion and religious principles reveals the Amish capacity for adaptation within constraints. The necessity for this transformation arose from simple mathematics. With families averaging 6-7 children, with 90% of those children remaining Amish, and with finite farmland, agriculture alone couldn't support the growing population. By the 1960s and 1970s, this reality was forcing difficult choices. Young Amish men could leave the community to find factory work, potentially exposing them to influences that might lead them away from Amish faith. They could move to new settlements where farmland was cheaper, or the community could develop alternative economic opportunities that could support families while maintaining Amish lifestyle. The development of Amish businesses accelerated through the 1970s and 1980s, driven by both push factors, need for employment, and pull factors, including growing non-Amish demand for Amish products and services. The construction industry became a major employer of Amish men, with Amish crews building homes, commercial buildings and barns for both Amish and non-Amish customers. The reputation for quality workmanship, reliability and reasonable pricing made Amish contractors sought after. The manufacturing sector developed differently across settlements but generally focused on products where Amish skills provided competitive advantages. Furniture manufacturing became significant in many areas, with Amish craftsmen building high-quality wood furniture sold through retail stores and galleries. The combination of skilled craftsmanship, efficient production using traditional techniques adapted for small-scale manufacturing, and relatively low labor costs created profitable businesses. The retail operations that developed included bulk food stores, hardware stores, fabric shops and general stores serving both Amish and non-Amish customers. These businesses occupied an interesting market niche. They offered convenience and often lower prices than conventional stores. They provided gathering places for Amish communities, and they employed community members in work that didn't compromise religious principles. The entrepreneurial adaptations to technology restrictions show Amish ingenuity in achieving business objectives while maintaining separation from conventional infrastructure. The prohibition on connection to public electrical grids doesn't prevent use of pneumatic tools powered by compressed air, diesel or gasoline generators providing power for workshops, or 12-volt DC systems powered by batteries charged by solar panels or generators. Amish machine shops operate sophisticated manufacturing equipment powered by compressed air or hydraulic systems. The telephone issue was resolved through community payphones, and more recently, cell phones used strictly for business purposes. The Amish recognized that modern business requires telephone communication with customers and suppliers. The solution was establishing payphone shanties at the end of farm lanes or shared among several farms, allowing business calls while preventing telephones from becoming sources of worldly influence in homes. Cell phones for business use represent further adaptation, with phones often kept in shops or barns rather than carried constantly. The computer and internet questions created more difficult challenges because email and web presence are increasingly necessary for business communication and marketing. Some Amish businesses address this by hiring non-Amish employees who handle computer-based tasks. Others established arrangements where computers and internet connections are maintained in separate business offices rather than in homes or integrated into daily life. The most progressive Amish groups have allowed limited computer use under specific restrictions and oversight. The business ownership patterns reflect Amish values, emphasizing community benefit over individual accumulation. Most Amish businesses remain small, typically family operations employing the owner, his sons, and perhaps a few employees from the community. The very largest Amish businesses might employ 5,100 people, almost all Amish. This scale limitation reflects both practical constraints. Managing large organizations is difficult without modern communication and organizational technology, and philosophical preferences against concentration of economic power. The employee profit sharing and generous wages many Amish businesses offer demonstrate commitment to community welfare. Successful Amish business owners understand that their prosperity depends on community support, and that sharing success with employees is both moral obligation and practical necessity for maintaining good community standing. Businesses known for treating employees poorly or for excessive owner profit-taking face social disapproval and might struggle to retain employees who have other opportunities. The business succession planning typically involves transferring the business to one or more children who have worked in the business and demonstrated capability and commitment. The business isn't sold to maximize parent income in retirement, but rather is transferred to preserve the employment it provides and to help the next generation establish economic security. Parents might receive ongoing income from the business or might be supported by children who take over the business, but maximizing sale price isn't the primary consideration. The niche marketing strategies successful Amish businesses employ leverage both product quality and cultural branding. Furniture marketed as Amish-made commands premium prices based on reputation for craftsmanship. Amish baked goods, jams, and other food products appeal to consumers seeking traditional, high-quality items. Even Amish construction services are marketed partly on the basis of Amish identity and the qualities honesty, hard work, quality that consumers associate with the Amish. The business financing through community resources rather than bank loans means Amish businesses typically start small and grow organically as profits are reinvested. A cabinet maker might start in a small workshop with basic equipment purchased with saved capital, build reputation and customer base over years, gradually expand equipment and workspace, and eventually employ sons and community members in a substantial operation. This gradual growth avoids debt and the vulnerability it creates. The business failures that do occur are handled through community mechanisms that minimize individual catastrophe while maintaining accountability. A failing business might be quietly subsidized by family members or church leaders who help the owner manage through difficult periods. Alternatively, the business might be sold or dissolved with community assistance in settling debts to other Amish creditors on reasonable terms. The community's interest in maintaining entrepreneurs' standing and ability to contribute to community encourages working out problems rather than forcing formal bankruptcy. The competitive dynamics within Amish business communities create interesting tensions. Multiple Amish contractors or furniture makers in the same settlement compete for customers, potentially creating conflict. The cultural emphasis on community harmony and avoidance of worldly competitive behavior moderates but doesn't eliminate this competition. Businesses differentiate through quality, price, specialization, and relationships rather than through advertising or aggressive sales tactics. The regulation and licensing challenges affect Amish businesses variably depending on industry and locality. Construction businesses typically need various permits and licenses which the Amish generally obtain without issue. Food processing businesses face health department oversight that sometimes conflicts with Amish practices, creating negotiation about accommodations. Professional licensing requirements for occupations like accounting or engineering effectively exclude the Amish because the education and testing requirements are incompatible with Amish education. Limits. The Amish demographic trajectory represents one of the most remarkable population growth stories in modern American history. From approximately 5,000 in North America in 1900, the population has grown to over 375,000 today, with growth accelerating in recent decades. Understanding how the Amish maintain high fertility while achieving economic success reveals the interplay between culture, economics, and demographics. The fertility rates that produce Amish population growth average 6 children per family, far above the US average of approximately 1.7. This high fertility isn't accidental but reflects conscious choices based on religious values, including rejection of birth control, acceptance of children as divine gifts, and understanding that large families are economically beneficial in Amish context. The Amish are essentially the only large American population group maintaining near replacement fertility without governmental pronatalist policies or economic incentives. The retention rates of approximately 90% of young people choosing to join the church and remain Amish are crucial to population growth. High fertility alone wouldn't produce population growth if most children left the community. The combination of high fertility and high retention produces the doubling time of approximately 20 years. This retention rate is particularly remarkable given that young Amish have exposure to non-Amish society and theoretically could choose to leave for opportunities that might appear more attractive. The Rumspringa period during adolescence, traditionally characterized as time when young people can experiment with non-Amish lifestyles before deciding whether to join the church, is often misunderstood and exaggerated in popular culture. While practices vary across settlements, Rumspringa generally doesn't involve complete freedom to abandon Amish ways, but rather some loosening of restrictions while young people court and socialize. The vast majority of young people going through Rumspringa ultimately choose to join the church. The factors explaining high retention include strong family bonds, economic opportunities within Amish communities, social networks centered on church and community, cultural identity that becomes deeply internalized through childhood and adolescence, and realistic recognition that leaving would mean separation from family and everything familiar. The young Amish person contemplating leaving faces losing relationship with parents and siblings, abandoning social networks, and entering an unfamiliar world without the education or skills that mainstream society values. The economic logic of large families in Amish context differs fundamentally from mainstream American society. In mainstream society, children are primarily cost centers requiring substantial expenditure on housing, food, education, and activities, with limited economic contribution until young adulthood. In Amish society, children begin contributing productive labor at young ages, helping with farm work, household tasks, and family businesses. By adolescence, they're significantly productive contributors to household economy. The housing costs that make large families economically challenging for typical Americans are lower for the Amish. Families build their own homes using community labor and often hand-me-down materials, building as large as needed without mortgage constraints. The homes are plain but functional, lacking expensive finishes and modern amenities, but providing adequate space for large families. Adding a bedroom for another child might cost $3,000 to $5,000 in materials, rather than the $50,000 or more a conventional family might spend buying a larger house. The education costs are minimal. The Amish operate their own schools at far lower cost than public or private schools. A one-room schoolhouse, serving 25-30 children, might have annual operating budget of $15,000 to $20,000 covered by the families whose children attend, working out to perhaps $600 per child annually. This compares to $12,000 to $15,000 per pupil annual costs in typical public schools. The lack of education beyond 8th grade eliminates the college costs that burden typical American families. The healthcare costs for children, while potentially substantial, are managed through the mutual aid systems described earlier. Routine care is paid by families from their own resources. Serious health needs are addressed through community assistance. The absence of insurance premiums means families aren't paying $1,000 or more monthly for health coverage that typical American families with children pay. The clothing costs are lower because Amish clothing is plain, homemade, and handed down through siblings and across families. Entertainment and activity costs are minimal because Amish children don't participate in expensive activities that occupy typical American children. The total cost of raising an Amish child to adulthood is likely 1/3 to 1/2 the cost for a typical American child. The geographic expansion driven by population growth has created new settlements throughout North America and has transformed the Amish presence from concentration in Pennsylvania, Ohio, and Indiana to distribution across 32 states and 4 Canadian provinces. The settlement founding process typically begins with families from an established settlement purchasing farmland in a region where land is more affordable. These pioneer families establish the foundation for a new community, building schools and establishing church districts as more families arrive. The factors determining which new settlements succeed or fail include land prices and agricultural productivity, availability of non-agricultural employment opportunities, distance from established settlements affecting family visits and mutual aid, receptiveness of non-Amish neighbors and local officials, and natural resources like timber and water. Successful settlements grow through both continued in-migration and natural increase, while unsuccessful settlements stagnate or are abandoned. The economic development trajectories of new settlements show predictable patterns. Initially, Settlement economies are primarily agricultural as pioneers establish farms. As population grows, and as children of pioneers reach adulthood, businesses develop to serve community needs and to employ young people for whom farmland isn't available. These businesses then attract additional Amish families seeking employment opportunities, creating a growth cycle that can continue for decades until land prices rise enough to make the settlement less attractive to new families. The settlement dynamics create interesting competition and cooperation among settlements. Established settlements sometimes view new settlements as threatening their labor supply, as young families leave seeking affordable land. But established settlements also benefit from new settlement founding, because it provides outlets for population growth that might otherwise create unsustainable pressure on local land prices. Employment. The settlements maintain social and economic ties through family connections, business relationships, and mutual aid during crises. The cultural transmission mechanisms that maintain Amish identity across generations even as population grows rapidly include socialization within families emphasizing Amish values, education in Amish-controlled schools teaching from Amish perspective, worship and fellowship reinforcing community identity and values, courtship and marriage within the community, creating family ties that bind individuals to community, and language preservation through Pennsylvania Dutch dialect spoken in homes and communities. The genetic bottleneck issues arising from the small founding population and continued in marriage create health challenges that the Amish address through genetic counseling and carrier testing for known recessive conditions. Certain genetic disorders occur at higher rates in Amish populations because founders carried recessive alleles that became concentrated through in-marriage. The Amish have generally accepted genetic counseling to help couples understand their carrier status and risks to potential children, though they typically reject abortion even when genetic testing reveals affected fetuses. The Amish economic model faces contemporary challenges that test its resilience and adaptability. Understanding these challenges and how communities are responding reveals both the system's strengths and its vulnerabilities, and shows how the Amish continue evolving while maintaining core principles. The land scarcity crisis in established settlements has become acute as growing populations compete for finite farmland. Lancaster County, Pennsylvania, where farmland prices have reached $15,000 to $25,000 per acre, exemplifies the problem. Young families who might have purchased 60-acre farms for $200,000 in 1980 find that similar farms now cost $1,200,000 or more. Even with cash purchase and family assistance, these prices are beyond reach for most young couples. The result is that fewer young families can establish farms, forcing more into non-agricultural employment. The pressure on farm preservation has created community responses, including pooling resources to purchase farms that are then rented to young families with eventual purchase options, establishing funds that provide down payment assistance for farmland purchases, accepting smaller farm sizes 20 to 40 acres instead of 60 to 80 acres through more intensive farming methods, and increasing emphasis on high-value agricultural products including organic produce, specialty crops, and direct marketed products that generate more income per acre. The technological pressures as Amish businesses compete with conventional businesses using modern technology create ongoing challenges to maintaining separation. An Amish furniture manufacturer competing against conventional manufacturers using computer-controlled cutting equipment and modern finishing systems must find ways to match quality and efficiency without adopting the prohibited technology. The adaptations include exceptionally skilled craftsmanship that produces quality justifying premium prices, pneumatic and hydraulic systems that accomplish tasks conventional businesses do with electrical equipment, strategic use of outside services for specific tasks, computer-controlled cutting, for example, that the Amish business can't accomplish internally, and market positioning emphasizing traditional craftsmanship and Amish identity rather than competing on price or efficiency. The internet and digital commerce present particularly difficult challenges. Customers increasingly expect to find businesses online, to communicate via email, to order through websites, and to pay electronically. Amish businesses that refuse all digital presence risk losing customers to competitors. The community responses vary by settlement but generally involve relaxing restrictions while maintaining boundaries, including allowing business websites maintained by non-Amish employees, contractors, permitting email communication for business purposes with computers kept in offices separate from homes, accepting credit card payments through non-Amish operated processing services, and maintaining restrictions on personal internet use and on internet in homes. The healthcare cost inflation affecting all Americans creates particular pressures on Amish communities, whose mutual aid systems must absorb ever-increasing medical expenses. A serious illness that might have generated $50,000 in medical costs in 1990 might cost $500,000 or more today. The community response mechanisms, including negotiated discounts with healthcare providers who appreciate cash payment, medical tourism to lower-cost countries for certain procedures, increasing use of Amish health plans and similar risk-pooling organizations, and some acceptance that not all medical interventions are necessary or beneficial, allowing families to decline expensive treatments. The education debates within Amish communities about whether 8th grade limit remains adequate for contemporary economy create tensions. Some Amish recognize that operating modern businesses requires knowledge and skills that traditional education doesn't provide. The proposals for extended education include apprenticeship programs providing structured training in business management, accounting, and skilled trades beyond informal learning, Amish-operated vocational schools teaching 9th and 10th grades, focusing on practical business and technical skills, and greater use of outside experts and consultants to provide specialized knowledge for Amish businesses. The generational shifts in attitudes toward technology, separation and engagement with modern economy create internal community tensions. Younger Amish who have grown up with greater exposure to non-Amish society through business interactions sometimes question restrictions that older generations consider essential. The church leadership must balance maintaining core principles against recognizing that some adaptation is necessary for community survival. The Ordnung, the unwritten rules governing behavior, evolves gradually through consensus processes that allow change while maintaining continuity. The attraction of mainstream affluence affects some young Amish, who observe non-Amish prosperity and wonder if Amish restrictions unnecessarily limit their opportunities. The retention rate remains high at 90%, but that means 10% choose to leave, and those who leave often cite economic opportunity as one motivation. The community responses include providing better economic opportunities within Amish society through business development and employment programs, emphasizing non-material benefits of Amish life, including family cohesion and community support, and accepting that some loss to outside world is inevitable, price of allowing freedom of choice in joining church. The tax policy changes that could affect Amish economic practices create potential vulnerabilities. The Amish exemption from Social Security and Medicare taxes depends on congressional willingness to maintain religious exemptions that could be challenged. Proposals for consumption taxes or other tax reforms could eliminate tax advantages Amish currently enjoy. The universal healthcare proposals that periodically emerge in American politics could require Amish participation in governmental health systems that would violate their principles of separation and self-sufficiency. The cultural appropriation and commercialization of Amish identity creates challenges as non-Amish businesses use Amish branding to market products that may have little connection to actual Amish communities. Consumers seeking Amish products may purchase items from non-Amish manufacturers, falsely claiming Amish origin. This dilutes the value of authentic Amish products and creates consumer confusion. The Amish have limited recourse because trademark law requires bureaucratic engagement and potential litigation that conflicts with Amish principles of avoiding legal conflict. The environmental and sustainability pressures that affect agriculture generally also affect Amish farming. Regulations on manure management, water quality, and land use sometimes conflict with traditional Amish practices. The organic agriculture movement creates opportunities because Amish farming methods often align with organic principles, but certification requires paperwork and compliance that some Amish resist. Climate change and associated weather pattern shifts affect agricultural productivity in ways that require adaptation of farming practices. The succession planning challenges as founding generation of Amish business owners reaches retirement create questions about business continuity. Many successful Amish businesses were established by entrepreneurs who combined traditional Amish skills with business acumen to create profitable enterprises. Their children may have grown up in relatively prosperous circumstances and may lack the same drive and skills, ensuring that businesses continue operating successfully under second-generation management requires intentional succession planning and training. The financial regulation that affects all businesses also affects Amish operations, sometimes creating compliance burdens that are difficult without modern record-keeping systems and professional financial management. Tax compliance, employment law, workplace safety regulations, environmental regulations, and industry-specific rules all require attention and documentation. Larger Amish businesses often hire non-Amish accountants and consultants to ensure compliance, creating dependencies on outside expertise. The insurance mandate provisions in the Affordable Care Act created significant challenges because the law required most Americans to obtain health insurance or pay tax penalties. The Amish sought and received exemptions based on religious objections, but the process required engagement with governmental bureaucracy that many Amish found troubling. Future legislation could create similar conflicts where Amish principles clash with governmental mandates. The Amish economic system that has enabled a small religious minority to thrive for over 300 years while rejecting modern banking, insurance, and governmental assistance represents one of history's most successful alternative economic models. The approximately 375,000 Amish in North America today have demonstrated that prosperity and security don't require participation in conventional financial systems, and that community-based mutual aid can provide more reliable protection against economic disruption than commercial and governmental institutions. The resilience during major economic crises from the Great Depression through the 2008 financial crisis and COVID-19 pandemic provides compelling evidence that the Amish approach delivers advantages that conventional economics often overlooks. The absence of debt that limits growth potential also prevents bankruptcy during downturns. The agricultural foundation that generates lower income than industrial employment provides food security when supply chains fail. The community mutual aid that seems inefficient compared to insurance proves reliable when insurance companies and governments struggle to meet obligations. The demographic success with population doubling every 20 years while maintaining economic prosperity challenges assumptions that high fertility and large families are incompatible with modern prosperity. The Amish have created economic and social systems where children are assets rather than liabilities, where community support makes raising large families manageable, and where cultural transmission mechanisms maintain identity and values across generations. The business adaptations show Amish capacity to evolve within constraints. The transition from primarily agricultural economy to one where most families derive income from businesses, trades, and manufacturing occurred while maintaining core principles of separation, community orientation, and rejection of modern technology. The success rate of Amish businesses exceeds national averages, demonstrating that competitive advantage can come from community support, reputation, and distinctive business practices rather than just from technology and scale. The financial practices including paying cash for major purchases, avoiding consumer debt, maintaining reserves for emergencies, and building wealth through business equity and land appreciation rather than through financial markets have proven more reliable than debt-financed consumption and market-based investing for most Americans. The median Amish household wealth substantially exceeds median American household wealth despite lower incomes, showing that spending discipline and conservative financial management create prosperity. The challenges the Amish face, including land scarcity, technology pressures, healthcare cost inflation, and succession planning, are significant and will require continued adaptation. But the 300-year track record of successfully adapting to changing circumstances while maintaining core identity and principles suggests that Amish communities will continue finding ways to navigate contemporary challenges. The question of whether the Amish model could be replicated in mainstream society, or whether it depends on unique religious and cultural factors that can't be transferred, is important for understanding the model's broader implications. The reality is that key elements including community cohesion, social enforcement of norms, acceptance of traditional authority, and willingness to limit individual freedom for collective benefit are difficult to maintain in diverse, individualistic societies. The Amish model works for the Amish but might not be directly transferable. Yet some principles from Amish economic practice have broader applicability. The importance of community support systems as insurance against economic disruption is relevant beyond Amish society. The advantages of avoiding excessive debt and maintaining financial reserves apply universally. The benefits of practical skills training and multi-generational knowledge transmission aren't limited to agricultural societies, and the resilience that comes from diversified household economies producing some of their own needs rather than depending entirely on cash income and market purchases is achievable in various contexts. The Amish themselves would likely resist being held up as economic models for others, as they understand their practices as religious obligations rather than as economic strategies chosen for their effectiveness. They maintain their economic practices because they believe God requires separation from the world and mutual care for community members, not because cost-benefit analyses show these practices are optimal. The economic success is seen as blessing that comes from faithfulness to religious principles rather than as the goal justifying those principles. The historical memory within Amish communities of ancestors who suffered persecution in Europe for their faith, who immigrated to America seeking religious freedom, and who established communities through hard work and mutual support, creates strong incentive to maintain the practices that enabled survival and prosperity. The economic system isn't just a set of techniques, but is understood as inheritance from faithful ancestors that current generations hold in trust for future generations. For those interested in how alternative economic models function outside conventional financial systems, the Amish experience provides evidence that prosperity and security can be achieved without banks, insurance companies, or governmental programs. If examining how community-based mutual aid and conservative financial practices compare to conventional approaches would be valuable, exploring the specific mechanisms including alms funds, benefit auctions, and community lending reveals practical details often missing from idealized descriptions. Your perspective on whether Amish economic success could inform broader economic policy, or whether their model is too dependent on unique religious and cultural factors to be widely applicable, would contribute to ongoing discussions about financial resilience and community economics. The comments section offers space for debating whether modern society could adopt any Amish practices, or whether the complete social and religious framework is necessary for the economic practices to function. For continued analysis of alternative economic systems, community resilience during crises, and how traditional practices sometimes prove more effective than modern innovations, subscribing ensures access to examinations of how different societies organize their economies. Understanding the Amish economic system isn't just historical or anthropological curiosity, it's relevant to contemporary debates about financial stability, community support, and the relationship between economic practices and social values.